Hello, everybody. Welcome to Thursday. The S&P 500 was up almost 0.25% today. Another really good day, another record-setting close, which is amazing. We've actually set a new record every single day this week so far. And this was mainly attributed to inflation cooling. The wholesale inflation report is called PPI, stands for Producer Price Index, was actually down 0.2% month over month. So prices on a wholesale basis actually slid. This is seen as a good sign. Wholesale inflation theoretically leads, retail sales. So if prices are down, that's a good thing. But more importantly, when you have CPI coming in under expectations and only grew at 0.2% for the month, which annualizes out to 2.4% for the year, that's a really good number. And then when you look at PPI actually going down, the inflation measure that the Fed looks at comes at the end of the month here. This is PCE, the Personal Consumption Expenditure Price Index. And when those two are good, usually PCE is good. And that's what the Fed's looking at. So it gives the Fed, some room to be able to maybe lower rates once or twice this year. And again, after the Fed meeting yesterday, 14 or 15, 15 out of 19, we're talking, on our dot plot of having one or two rate cuts, and nobody had a rate increase. So this gives them some room to do that, and we'll see what happens. First-time unemployment claims we're up to a 10-month high. So that's another thing. The Fed has a mandate for full employment or at full employment by their measure, which is 4% unemployment or less. But we're starting to see a few things that allow the Fed some room to be able to say, hey, we're going to do some rate cuts as far as that goes. Maybe as early as September. That's kind of the bet right now for the market as far as that goes. So we'll see what happens. But, we've got some other things happening here with this kind of artificial intelligence that's happening. Adobe announced their earnings today, and after hours, their stock is up over 14% because they're starting to get some benefits from the artificial intelligence portion of this move also. So that part of it is the part that could really drive this. If we can get inflation kind of under control, get the Federal Reserve, kind of backing off on restrictive monetary policy. And we can get these companies continue to have these big earning forecasts and whatnot going forward, you're going to see a market that does really, really well. So, there's lots of things that can get in the way of that, lots of reasons why we can have downturns and what have you. But it's the reason the market's going up now with inflation coming back and the artificial intelligence coming up. Those are two things that are kind of driving it the most. And throw in consumer spending, and you've got a pretty healthy situation there for the stock market. So anyway, good day to be an investor. Really good week altogether. But really been enjoying that. So we will be doing the show tomorrow. We had a 3-week break there due to some vacations and what have you. So if you want to join us, 12:15 to 1 o'clock on YouTube, Talk Money with Tom. It's a live stream. You can I'll answer your questions live. And I do a summary at the beginning of that show kind of for what I saw happening for the week. So I look forward to talking to you then. Thank you very much.